Welcome everyone, this is Vince Boddicker from Farmers Trading Company with a weekend market recap for today's farm life. Haven't seen a week of trade like this for quite some time. We do know that emotions drive markets, and with Russia finally invading Ukraine on Wednesday night, buyers took notice and took their stance in the grain markets. May not have lasted a long time, but they did make a statement. We did see sharp sell-offs in those beans and corn on Thursday while wheat held limit up. Why did wheat hold limit up? I'm just guessing it closed well. You had probably more of a threat of wheat and barley coming out of Ukraine than you do corn. Not that it's not good, but I think all of that makes a difference. Why? Again, Ukraine doesn't grow a lot of soybeans. Forecasts were for rains moving into Argentina on Wednesday night and continuing for the next week or so, with accumulations of 2 to 3 inches possible. I think we all know that there was some substantial damage done in South America, but there's still a crop there, just like we had here last fall. As we got into early to mid-August, we thought, acted like there was going to be no crop, but there was still a substantial crop. I think South America will be the same way. We attribute that big sell-off on Friday from early morning tweets that Putin and Ukraine are likely to have talks this weekend that ease tension, thinking it would all be over soon, and it may, but it may not be the result some people are thinking and where we're at. I think when those prices didn't recover early in that, when the day session opened at 8:30 on Friday, you did see traders saying, I've been in here for a while, I've made good profits, take them home and bank those money and see what happens over the weekend and early next week, whether that be with Ukraine or with South America. Now, let's keep in mind that when we're looking at that Ukraine situation, they do grow quite a bit of corn, but their potential is only about half of what it could be. So that could be greatly expanded, which also bothers the trade in here. Why would that tweet mentioned above have the large effect on prices? Then we'd think, we got a tweet. We got to keep in mind, I think, that in a bull market, a lot of times it's either supply or demand. This one is really some of both. And never before, when we've had a market like that, have we really had algorithm traders involved. And let's keep in mind, they control approximately 90% of the volume in all commodities. Shouldn't say control, but they are 90% of that volume in all commodities, even in the stock market. Secondly, most of them trade off content and news stories. And we believe that when their computers saw that news story, that system evaluated it as negative and sold. And it took a while for those prices to come down. We were still 40 to 50 higher when we closed at 745. But when we came in on Thursday morning, but as we get into Friday, things went sharply lower quickly on those avenues, and we just got to see where it goes in here. But it did end up ugly as we came into the end of Friday. When we came in and those sell orders came in there, I don't believe there was many buy orders in between, so you get gaps in there, and it looked like it was bombs away. No pun intended on that. Where does next week take us? I believe traders will look how much rain and how widespread it was in South America. They will assess the Ukrainian situation, and with a 2-day break in trading, do we get maybe cooler heads looking at this thing and taking a little bit more of a stance than just coming in emotionally and jumping on it? Let's see what happens. The other thing I think we need to figure out is, was part of Friday's sell-off margin call selling? If it was, traditionally that can last up to 3 days. So where do we go from here? Well, if you look at beans, within 15 cents of our 20-day exponential moving average, and as we look in that, we look as important, because one of the things we've learned over time is with that moving average, if a commodity hasn't touched that line within at least 20 days, when you get to it that first time or close to it, it'll get a significant bounce in there. And Friday was day 27 since the last time that moving average was touched. And you look at November beans, new crop, you got to believe $14 should be good support. Could we trade down to $15.60 to $15.80 in that March and May contracts? I think you could, but let's see what happens. But if those support areas hold, again, what are we going to see? 40, 60, 80 cents. I'm not sure. It depends what other news are out there. Maybe it comes back and it gets to the top of the range where we were earlier this week. I would really think of this thing that we're going to get more into a sideways pattern and see what happens. One of the sources that we follow sold new crop corn last week. This particular source is very bullish on the grain markets and believe corn and beans can still establish new all-time highs and probably happens in that second quarter. We'll see if it does, but nonetheless, my point is they came in a comment early this week and noted, why did we sell or recommend our clients to sell new crop corn if we believe prices are going sharply higher? I think the words of wisdom there that he followed up with was, it's not the train you see coming you have to worry about. It's the one you don't expect. And you look at that. What did we do? Putin came in this week. Everybody thought markets were going to go higher and never retreat again, but they did. And those are the unknown things and some of the reasons why we still have to have a risk management if there is friendly things out here, because sometime it will turn, and when it turns, it'll do it in a big way. As we look at analyzing, is the top in the market, isn't it? I think only time will tell us that, but for right now, I do believe that the top is in, and I think it's going to take other news, whether that be a surprise in the USDA report, further weather problems in the U.S., something else unexpected in the world that happens that's going to make us turn around and check out those highs that we've had early on Thursday morning. But all in all, right now it looks we're going to be sideways and we've topped for the time being. And just a note before we go into the livestock sector here, within a couple of hours after this podcast is put up on the website, we will be doing another one and giving our opinion of why Putin wants Ukraine, give you some statistics about Ukraine and why it's so important. Not sure how it's going to be listed on that podcast website, but it would guess it's going to be in some type of a special report. So if you're interested, look for that. So as you get into the cattle market, opposite of the grains on Thursday morning, it got a little ugly, especially the feeder cattle with corn up the 35-cent limit and panic selling. It didn't last a long time on that, but nonetheless did leave some scars on the market. And we came into Friday morning after we recovered pretty good. We found weakness mid-morning. I think a lot of that was basically because cash coming in at 142 on Friday and late Thursday on small numbers after early week numbers of 143 to 144. That was basically $1 to $2 higher. So we're going to go home steady. Looks like we're going to have another good kill week. Demand remains good. Box beef prices, I would think somewhere in the next week are going to stabilize, which should help that market as a whole. Friday, we did have that cattle on feed report, which really turned out to be a nothing report, which is fine. On feed came in at 101% versus ideas of 100.7. Placements at 99% versus estimates of 98.6. And marketed at 97% versus 97.1. Again, we don't think it'll have any big effects on the market next week, but let's see what may happen. As you look at feeder cattle, as we noted, very violent on Thursday, went down $6.25 limit to start that session on Thursday. Had some great recoveries, $3 to $5, and again, some weakness again on Friday, but all in all, not a bad week. We would expect steady to firm live cattle prices for next week. Feeder cattle markets, I think, were lower on Wednesday, only because of the cold weather and the snow and Tuesday, not people attending, not so much anything else that was happening in the world. As we look at the hogs market, April futures had a key reversal lower on Wednesday with follow through on Thursday. Usually not a good sign in there, but April was the only one that had that. So it takes a little pressure off, but an unreliable maybe signal that we don't use a lot anymore, but it's there. The trade may see it. With 3 days down in this market, we may see where we've got to get a $10 to a $12 sell-off, if not more. But from the fundamental side, this market should be supportive on prices and demand, at least through that second quarter. As you take a quick note at the cold storage numbers that we had up, on Wednesday, late Tuesday. Beef cold storage was up 1% on the year and 4% in a month, maybe a bit bearish in there. Pork in the cooler was down 6% from 2021, but up 8% from December. Again, we don't believe these numbers will have much of an impact on the market, but it's good to have them out there and let people know what it is. This has been Vince Boddicker from Farmers Trading Company with a weekly market recap on today's farm life. For more information or questions, give Andrew or Vince a call at 605-996-6500. Have a great weekend.